$346.45 USD. That is the number staring back at us on the monitors right now, up 17.72 points, or roughly 5.39% in today's intraday session. If you are looking at your screen, watching the green ticks flash on your interactive broker's trading terminal, or checking the Robinhood app on your phone, you might be feeling a sudden rush of relief. Finally, a bounce. But let's be honest with each other. If you have been holding Adobe for the last 12 months, this green candle feels less like a victory and more like a gasp for air. The expectation right now, the narrative dominating every online investment forum and Fidelity wealth management newsletter, is that Adobe is a legacy giant walking into a buzzsaw. The market expects that generative AI, Midjourney, DALL-E, and the looming IPO of Canva is going to dismantle Adobe's creative monopoly the same way digital cameras dismantled Kodak. That is the expectation. Adobe is the victim of the AI shift. But the reality is substantially more complex. And if you look closely at the institutional flows we are seeing today, the reality might actually be that Adobe is building the only legal enterprise-grade AI infrastructure that matters. While retail investors are panic selling on investing sites, Smart Capital is realizing that Adobe isn't the victim, it is the arms dealer. Let's break down exactly what is happening with the price action today, because a 5% move on a company with this market cap doesn't happen by accident. We are seeing a massive volume spike, over 4 million shares traded significantly ahead of the daily average, and this is occurring just days before their critical Q4 earnings report. When you see a move of this magnitude leading into earnings, it often suggests that someone knows something, or at the very least, that the short sellers who have been piling into this stock for the last 6 months are getting nervous. The stock has been battered, trading down significantly from its 52-week highs, effectively pricing in a disaster scenario. But today's price action tells us that the disaster might be off the table. We are seeing a rotation. You can see it if you look at the sector heat maps on your Fidelity trading platform or SoFi Active Investing dashboard. Capital is moving out of the high-flying hardware stocks, the NVIDIAs that have already run up 300%, and it is looking for value in software. Adobe, sitting here at a PE ratio that we haven't seen in years, is suddenly looking like a deep value play to the algorithms managing Schwab intelligent portfolios. But why the fear? To understand this bounce, we have to understand the crash that preceded it. The bear case for Adobe has been simple and terrifyingly effective. The argument goes that professional creatives will no longer need complex tools like Photoshop or Illustrator when they can simply type a prompt into a free AI generator and get a result. This narrative has terrified the individual brokerage account holders who look at Tesla stock or Apple stock and see resilience, but look at Adobe and see obsolescence. The fear is that the moat, the steep learning curve that kept users locked into the Adobe ecosystem, is evaporating. If anyone can be a designer, why pay Adobe $60 a month? This fear has driven the stock down to levels that imply zero growth. However, what we are seeing today is the market waking up to the flaw in that logic. Here is the counter-narrative that is likely driving today's 5.39% surge. Corporate America cannot use Midjourney. Legal departments at Fortune 500 companies, the clients who actually pay the massive bills for Adobe's enterprise subscriptions, are terrified of copyright lawsuits. They cannot use open AI models trained on stolen data. They need a clean AI. This is where Adobe's Firefly comes in. Adobe trained its AI exclusively on its own stock library, meaning it is commercially safe. While retail investors are panic selling on investing sites, smart capital is realizing that Adobe isn't the victim, it is the arms dealer. Today's move suggests that investors are betting the upcoming earnings report will show massive adoption of Firefly in the enterprise sector, proving that AI is a tailwind for Adobe, not a headwind. Let's shift gears and look at the broader technical picture because it is fascinating. For the last few months, Adobe has been stuck in a brutal downtrend, making lower lows and lower highs. It's been a painful hold for anyone engaged in self-investing. But today's candle is forming what technical analysts call a bullish engulfing pattern on the daily chart. We bounced perfectly off a long-term support level that dates back years. If you use SoFi investing tools or Fidelity ETFs that track technical factors, you'll notice that the RSI, Relative Strength Index, was flashing oversold for weeks. The rubber band was stretched too far. When a stock of this quality gets this cheap, it doesn't take much news to spark a short squeeze. And that is part of what we are seeing today. Shorts who were betting on a collapse are being forced to cover their positions, buying back shares and fueling this rally. Comment below how many shares of Adobe you currently hold and what your average buy price is. Are you underwater or did you manage to catch the falling knife at the bottom? I want to know if you are holding through the fear or if you sold out. Now, we need to talk about the competition because you cannot analyze Adobe without talking about Canva. If you use investing sites to track private markets, you know Canva is gearing up for a massive IPO. They're the David to Adobe's Goliath. Canva is easy, it's fast, and it's increasingly powerful. For a long time, Adobe ignored them, thinking they were just for amateurs. That was a mistake. Now Adobe is fighting back with Adobe Express, and they are aggressive. They are integrating Firefly directly into Express, trying to offer the ease of Canva with the power of Photoshop. This war for the prosumer, the marketing manager who isn't a designer but needs to make a banner ad, is where the future growth lies. If Adobe loses this demographic, they become a niche tool for high-end professionals, which limits their growth. But if they can win here, the upside is massive. The market is watching this battle closely. Today's price action might also reflect rumors or data leaks suggesting that Adobe Express user numbers are finally starting to accelerate, taking market share back from Canva. Let's zoom out and look at the macro environment because no stock trades in a vacuum. We are in a unique economic moment. Interest rates are fluctuating, and the Federal Reserve's decisions are impacting every investment help column you read. High interest rates usually hurt high-growth tech stocks because they reduce the present value of future earnings. However, Adobe is a cash flow machine. They are not an unprofitable startup praying for venture capital. They generate billions in free cash flow every quarter. In a high-rate environment, companies with actual cash, like Apple stock and Adobe, become safe havens. If the economy slows down, companies might cut their ad spend, but they rarely cancel their Creative Cloud subscriptions. It's the last thing to go. You can't run a marketing department without Photoshop. This stickiness is why Fidelity mutual funds and Fidelity IRAs have historically held heavy positions in Adobe. It is a defensive tech stock. Today's move might be a flight to quality. Investors are scared of the speculative AI bubble bursting, so they are parking their cash in the company that actually makes money from software. We should also discuss the Creative Cloud business model itself. Remember when Adobe switched from selling boxes of software to a subscription model? It was controversial, but it was brilliant. It smoothed out their revenue. Now they are trying to pull off a second pivot, moving from a tool provider to an AI co-pilot provider. They are introducing credit systems for generating images. Every time you ask Firefly to generate a picture, it costs credits. This is a hidden revenue stream that most retail investors on SoFi robo-advisor platforms are missing. If AI takes off, Adobe doesn't just sell a subscription, they sell the usage. It turns their software into a utility, like electricity. The more you use AI, the more you pay. This usage-based pricing could be the catalyst that drives the stock back to its all-time highs. The market is currently pricing Adobe as if AI will reduce the number of seats they sell, fewer designers needed. But the bull case is that AI will increase the spend per seat through these credit packs. If that reality takes hold, the current price of $346 is a steal. However, we must address the risks. I would be doing you a disservice if I didn't play devil's advocate. The Department of Justice and regulators globally are cracking down on big tech acquisitions. Adobe tried to buy Figma